What do you make of the S&P 500? I mean, we're close. Do you think it will make a record high? And by the way, does it matter?
Well, it will make a record high. To some short-term technicians, it will matter. The bigger question is, will it stay there? Will it keep going on this Fed rally? Just there's no alternative for other asset classes relative to stocks to give investors any sort of return that's meaningful. And will the market continue to look past the bad news? You mentioned some earlier. The universities are reversing course. We know what unemployment is, around 10%. Or will the market just keep charging higher, thinking that there's pent-up demand, that lower interest rates is a lower cost for companies, unemployment is a lower cost for companies, they're running very efficiently, technology is helping lower the cost for companies, and maybe we just have a decent 2021 with strong corporate profits. So there's this push and pull right now, and I think right now the optimism is winning out.
Yeah, why do you think that is, Mark? I mean, this appears to be the market that everybody's kind of waiting to drop because you can make all the arguments, oh, it's Fed stimulated, oh, the valuation's too high, millions unemployed. I mean, by the way, all good arguments. Everybody kind of is just waiting for the bottom to drop out, but yet it just keeps going higher. It's the most hated, I guess, bull market, if you want to call it that, ever.
Right. And I was thinking about big retail last night and why they're doing so well and why the earnings there are so strong. And the reality is, if you would have said a year ago that a great percentage of the mom and pop and small independent retailers would basically be shut down, we would have cognitively realized, well, then everyone's going to go shop at Target or Walmart or Amazon. And that has proven to be a huge boost to those retail enterprises. So what's happening is this underlying fundamental shift in the economy is benefiting big retail. It's benefiting big tech. It's benefiting the work from home and the stay at home. And then those stocks in turn drive the stock market higher. It's creating a disconnect to the underlying economy, which is full of a 10% unemployment, concerns, and shutdowns. So it's really a pool of winners driving the stock market and an underlying economy that's dragging. And investors should look at the earnings and look at where the money is going, and that's where the returns are going to follow.
Quickly, do we just ride the winners then, Mark? Do we just keep on betting on that horse that keeps on winning? Or at what point do we take some cash out here and maybe put it in the sock drawer?
Well, it depends what your risk is and how long your time is. I would broadly diversify. We will reverse out, and then industrials and some select REITs will participate. Other sectors will participate. I think if you want to play some beaten down sectors, there may be opportunity in corporate credit, especially in the travel and leisure sector, if you think we're going to get a vaccine. There are ways to stay invested other than in big tech. Municipal bonds might look attractive if we get a higher tax scheme in November, if you're an asset allocator. So I think you stay invested, broadly diversified, but do not abandon what has been winning.